This is the AI News Flash for May 16th, 10 p.m. UTC. First up, the S&P 500 rose 0.13% for the week, extending its winning streak to 7 consecutive weeks. That's the longest streak since December 2023. However, Friday saw a sharp 1.24% decline. The Trump XI summit ended anticlimactically with no semiconductor deal. Boeing was the worst performer, down 7% for the week. While China agreed to purchase approximately 400 to 450 engines and 200 aircraft, the scope fell short of Wall Street expectations. Meanwhile, Nvidia gained 4.7% for the week. CEO Jensen Huang joined the delegation, and H200 chip sales to China and AI guardrails were on the agenda. On Thursday, Cerebras Systems went public, selling 30 million shares and raising $5.5 billion. The stock surged 68% on its debut, making it the largest U.S. tech IPO in recent years. Cisco Systems raised its fiscal 2026 AI infrastructure order guidance from $5 billion to $9 billion. Kevin Warsh was confirmed as the new Federal Reserve Chair, while Jerome Powell's chairmanship ended Friday. Second story. Airbnb CTO Ahmad Al-Dal warned in a VentureBeat op-ed about the enterprise AI risk nobody is modeling. AI is replacing the very experts it needs to learn from. New graduate hiring at major tech companies has dropped by half since 2019. Document review, first-pass research, data cleaning, and code review, the very tasks where junior talent traditionally builds expertise, are being absorbed by AI models. Al-Dal points out that self-play reinforcement learning that worked for AlphaZero in Go doesn't translate to knowledge work. Unlike games with stable rules and unambiguous reward signals, knowledge work lacks both.
The result is a hollowing out. Surface AI capability continues to improve, while the human capacity to validate and extend expertise erodes. Benchmarks may still look fine for another decade, but the expertise reproduction pipeline could collapse in the meantime. A structural warning from the AI industry's top ranks drawing widespread attention.
Third story. U.S. data analytics giant Teradata officially launched its autonomous knowledge platform. The new platform unifies AI, analytics, and data across cloud, on-premises, and hybrid environments. According to Simply Wall Street, Teradata filed a $206 million shelf registration with the SEC tied to an ESOP-related offering. The company earned top-tier recognition in the 2026 ISG Buyer's Guides for AI and data platforms. Revenue is projected to reach $1.7 billion by 2029, with earnings forecast at $173 million, up about $43 million from the current $130 million. The strategy centers on production-grade AI, data, and analytics to compete with cloud-native rivals and stabilize recurring revenue. In an enterprise AI platform market intensifying competition with Snowflake, Databricks, and ServiceNow, the AI-native transformation of legacy data infrastructure companies has entered a decisive phase. Fourth story, the U.S. is beginning to see heavy job losses concentrated in roles highly exposed to AI. This Associated Press analysis is based on government economic data. Software development, data entry, customer support, financial analysis, and editing writing, all considered high AI substitution risk, are showing measurable employment declines in government statistics. By contrast, construction, healthcare, education, and hospitality, sectors centered on interpersonal skills, remain robust.
Cumulative AI-related layoffs have surpassed 156,000, with continued large-scale cuts at Meta, Microsoft, Amazon, Salesforce, and Cloudflare. New graduate hiring for Generation Z has fallen to its worst level in 40 years.
The $725 billion 2026 CapEx boom by 4 hyperscalers and the AI-driven labor market collapse are advancing simultaneously. AI employment policy is expected to emerge as the top economic issue in the 2026 midterm elections. The structural bifurcation of the labor market has entered a decisive phase. And that's all for this AI News Flash.